Hey, before we get started today, I want to talk about some bad actors in our industry right now that are trying to sell fear. The annuity salesman is who I'm talking about. They're using fear of the past election, fear from market volatility, fear about losing money forever. And it's all to sell you a product that pays them the most money. We have done the math on these annuities. They don't make sense, especially the indexed annuities. You need to stay away. I have a white paper we've created just for you. If you've been pitched to annuity or if you have an annuity, go to our website, wiserinvestor.com. Scroll down to the bottom. We have a buyer beware. Why do they keep trying to sell you that annuity white paper? Enter your email. You'll get emailed the white paper, and you can learn more about this vicious process that these bad actors are doing in our industry. Stay away from them. Always look for a fee-only advisor, people working in your best interest at all times, fiduciaries. That's wiserinvestor.com. Scroll to the bottom, subscribe to receive our white paper on why the annuity is a bad deal for you. Welcome to the Wiser Wealth Management Roundtable. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom are my co-hosts, Brad Lyons and Matthews Barnett. Hey, guys.
Hi, Casey. How's it going?
Today, we're going to play an interview I did with Robert Swarthout. Robert is kind of our in-house digital currency guru. I don't even have to track Bitcoin or any of that, really. I get text of different people that he follows from him, which I greatly appreciate. Allows me to stay on top of things without searching for information constantly. But there's kind of a debate going on, I think internally within me, and then probably even within the walls of our firm on what role digital currency has in a portfolio. We're still trying to self-discover that as a firm. I don't think that we have one stance one way or the other at this point. But as advisors, we have to fully understand the digital currency markets and what's happening. And there's a lot of crazy news out there. You know, we have Tesla buying up Bitcoin. We have XRP in a lawsuit versus the government that could drag out for years. So there's a lot of things happening right now.
There's a lot of layers to this story. There's the obvious, what we see in the news, and that's the price story. But beneath that, the genesis of this electronic currency, goes much deeper than just it being created to have a price value. It has other values at different levels within technology and currency itself. So it's great to have somebody like Robert, who's been a good friend of the firm, to follow this and take his time to come in and share it with us and our clients.
Absolutely.
Yeah, I mean, I think it's obviously a big topic that's all in the news now, and then I think it only get more impressive in the news and be a bigger part of kind of investing moving forward. Like Brad mentioned, the currency side of things, as well as just the popularity of how it increases. So it'd be interesting to see how that goes moving forward.
Well, let's don't delay any further. Here's our interview with Robert Swarthout. I'm here today with Robert Swarthout. Hello, Robert.
Good morning.
So Robert is on our advisory board to Wiser Wealth Management and has sort of become our in-house cryptocurrency expert. Thanks for coming out.
Well, thanks for having me.
Waking up this early morning to come do a podcast.
We'll use the word expert loosely here. So.
Well, I guess before we kind of dive into what's happening in digital assets, won't we just start with kind of an overview of maybe a first-time listener who's heard of Bitcoin, has seen it in the news? I mean, heck, it's up on the CNBC scoreboard now. Like it's the same as the Dow, but maybe they don't quite understand what all this blockchain and cryptocurrency and digital assets are. We'll spend just a couple of minutes on that.
Sure. So, blockchain, cryptocurrency, digital assets largely mean the same thing. But a blockchain is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. A blockchain is essentially a ledger of transactions that is duplicated and distributed across the entire network of computers in the system. Each block in the chain contains references to the previous transactions, and every time a new transaction occurs on the blockchain, a record of that transaction is added to every participant's ledger. Think of it as a public checking account registry.
So basically, every time you make a transaction, that transaction is logged. No one can tamper with it. It says, yep, this is your transaction. This is your Bitcoin.
Correct. Yes, you may be transferring Bitcoin from one wallet to another. It basically is just a registry entry for that transaction from your wallet address to my wallet address. And then the computers on the Bitcoin network, in this case, cryptographically prove that happened with math. And they get part of the fee that we paid to transfer it between us and move on to the next transaction.
And so the need for that is a decentralized currency, essentially, that you can transfer. You could transfer from one currency to another, like instead of doing a wire.
Correct.
Right? I think Bitcoin's more for almost like storage, really. You're look at it as like gold.
Yeah, Bitcoin, partially due to its design, its low transactions per second. Limitations make it more of a gold-like asset. The fees are high to move between wallets digitally. There's no like physical moving here, but it's borderless. If I was in Singapore, you could send me Bitcoin just the same as you can send it to me across the table here. So
that we kind of dive into the purposes of Bitcoin in a prior podcast in our series. So if any listeners want to dive into that further, they can move back a few podcasts ago. I think it was back in April,
August
of last year, and they can download more. So let's kind of move ahead and talk about the latest update. What you want to compare and contrast?
Sure, let's do it.
So if we put all of our money in Bitcoin last August,
you're happy today, momentarily at least.
Yeah. Let's see. Last August, in your notes here, 11,680.
Yes.
And yesterday it closed at what?
Actually, this morning it was at 46,160. So an easy 4x there.
Pretty good return.
Yeah.
So what? I used the word closed yesterday because that's how stocks work. Does Bitcoin not open 24/7?
It is open 24/7. They do the closing of the all times for crypto are based upon UTC or Greenwich Mean Time. So basically in the UK, they had time zone that's 0. We're currently here on the East Coast plus 5 hours. So yeah.
So let's talk about Ethereum.
Yep. So it ended August around 435, and today it is 1751, another 4x.
And then XRP.
It is ended August at around 28 cents, and today's at 46. So not quite a double there.
No, but you had the opportunity in the middle.
Yes, it was. It shot up to, I want to say
92 cents.
92 cents, came back down, and we'll get into a little bit more XRP stuff to kind of maybe explain that one a bit more here in a minute.
So yeah, and then what I find interesting is the market cap size.
Yeah, it's it went from in August being at 375 billion, all cryptocurrencies, to today being at 1.368 trillion. So essentially a 4x there as well.
That's interesting. I we'll get to this later in our notes here, but the institutional purchasing of a Bitcoin has certainly hit the headlines, and there's as we talked earlier, there's some more movement behind that. Mm-hmm. So basically, bull market in cryptocurrency is that a thing? There. In normal investing, there's what defines a bull market and there's what defines a bear market, right?
Right. So I would say the bull market and bear market terminology is used in the crypto space. The last time that things really hit a peak would have been late 2017 to the first couple of weeks of 2018, and then it was either a quick or slow downhill over the course of essentially 2018, 2019, and 2020. At least until the end of Q3 of 2020, when things kind of sentiment changed and kind of started heading in the other direction. Bitcoin hit its all-time high actually early this morning at 48,000. It's down roughly 2,000 from there, but there's been many days since early October 2020 that there's been days that it's been up or down 10% plus, sometimes 20, 25% in the matter of hours, up or down. The downs seem to be a little bit more drastic and violent than the ups, but you look at a chart of Bitcoin and there's some days it only looks like it only knows how to go straight up. So
PayPal is offering Bitcoin purchases now, which ironically, I feel like that's kind of why Bitcoin was created, so you wouldn't have to have PayPal anymore. But PayPal's now saying, okay, you can buy this cryptocurrency. You sent me a text. I think it was probably in December. Hey, OCC says banks could hold or cut custody cryptocurrencies.
That was a big deal because up until that point, it was not defined. So banks are obviously going to be pretty conservative, but now they're allowed to custody. I'd imagine sometime this year or maybe even next year, you'll start to see in banks, probably in wealth management banks type companies, to start providing that kind of service. The interesting thing with the PayPal news was you can buy it on there, you can sell it on there, you cannot transfer it off. It is kind of locked into their own little island. It is not your typical crypto exchange where you can buy it and transfer it somewhere else. So it's almost more of just a speculative play there than any sort of like real utility.
So I guess just to make sure everyone understands that, is that you can buy on like Coinbase Bitcoin.
Yep.
And that's like an exchange. It's like going to TD Ameritrade and buying a stock.
Sure.
But at TD Ameritrade, if you buy Coca-Cola stock, you could also transfer that out into like ComputerShare, who handles shares directly for Coke. You could always transfer it into there.
Sure.
You could issue a stock certificate and hold it in certificate form. So with Bitcoin, it's the same way. You have digital wallet. I think in the news, was it somebody had an investment in Bitcoin a long time ago, and they're lost the keys to their wallet, basically.
Yep. The guy that was one of the early guys that worked on XRP and did some Bitcoin mining, he had a hard drive, an external hard drive that he had stored his effectively the wallet file, the data of the wallet that basically says, hey, this represents this wallet address. I think that was from 2010 or 11. He has lost the password to that hard drive. That Bitcoin is now worth like $250 million. That if he never finds the password, or when they can't, basically get into it, that Bitcoin is gone forever. It's kind of out of circulation, and
I think I read somewhere he gets 10 guesses and then the drive erases or something.
So it was a secure hard drive that you have 10 guesses, or it re-encrypts itself, and it doesn't let you know the password effectively to decrypt it. So he has used 9 of the 10. So the figurative gun is now to his head.
Right.
So we'll see how that goes.
9 of the 10. You think it? Yeah. I saw on Twitter, someone actually tweeted at him and said that he was some hard drive
expert. You send it to the Israelis, is what I've heard.
Oh, really?
they might be good at doing this. So.
Hard drive expert.
Yeah.
Give him 10% of the $250 million, and
yeah. It'd be worth it at this point.
Well, you get one guess, though.
Yeah,
that'd be a tough interview. Which person do you hire?
Yeah.
So anyway, that's the premise here. Is that I guess what you're saying is that PayPal, you can't move it off. So
yeah,
you buy it, own it, and sell it.
And custody in crypto assets is difficult. I mean, it's not terribly user friendly these days, and it's a way to quickly end up with nothing. If you lose your password, or there's different formats that these things are done in, but if you don't properly custody your passwords, your custody of your assets become no longer yours.
Right. Well, I think with PayPal it'd be a little easier to get in.
Sure. which also raises the question, you should have good usernames and passwords and security of your PayPal account. So, and I'm sure they're helping people do that. So
1 Bitcoin is probably not a good password.
No.
So the what do you see right now as the biggest movement happening in digital currency? What do you everything that's happened in the last quarter, is there one particular thing you go, wow, this was really going to move this? You call this an asset class. So
right.
Is it really going to move this asset class to the forefront?
I think there's a couple things that could be happening that are starting to really raise the profile of this new asset class. There's the first one might be central banks are looking at what they call a CBDC, so central bank digital currency. And it's effectively just a representation of that bank's fiat currency. So in this case, the digital US dollar. It would allow them to settle more easily across borders with other banks. And it would likely be a closed system in this case. Like I wouldn't be able to go on and buy like a CBDC USD. It would just be for interbank type lending and transactions. And then the other piece might be institutions are starting to look at holding Bitcoin on their balance sheet. There's some examples we have here, like MicroStrategy is a company. They have been buying Bitcoin for, I think, about a year now. And they hold about 71,000 Bitcoin. That's worth about $2.5 billion today. And
what does MicroStrategy do?
They're, I believe, a technology investment firm. Is kind of they're publicly traded. Their ticker is MSTR.
Okay.
Their Bitcoin that's worth $2.5 billion. I know that they, in aggregate, have only put in just over $1 billion. So they've done well in that investment. They're kind of the poster child right now for that. And then Square, the company that you might have used to pay for something at a coffee shop or something, I think it was in November, put in about 1% of their balance sheet into Bitcoin, $50 million. That was actually in October. I see my notes here.
I wonder what the purpose of that is.
So for a while, Square's allowed their customers to come in and through the Cash App and buy Bitcoin. So they've, I guess, kind of are doing, walking the walk of sorts. I know that Jack Dorsey that started Square and Twitter, he's very much a Bitcoin proponent. So I guess he's trying to be supportive. And then kind of on a more boring front, Mass Mutual, the big insurance company, I believe, bought $100 million worth of Bitcoin in early December. That news kind of came out of nowhere. It would have not been the first company I would assume that would do that.
That's interesting. They saw a lot of insurance. So they're telling people, this is me ad-libbing what they're telling people. I don't know if they're actually telling people this or not, but they're basically saying, hey, buy this product. We guarantee this rate of return. Mm-hmm. And some poor old lady gets her 2.25% every single year, barely keeping up with inflation. Then they take her money, they go out the back door, and they're buying large cap stocks in Bitcoin.
Yep.
And they're making all this money on the spread.
Yeah, I mean, in this case, they look like geniuses. They probably turned $100 million into roughly, $300 million in this case.
Right.
But it's, to me, anytime a publicly traded company is doing this, putting out a press release because in filing with the SEC, it's just raising the profile and awareness of digital assets, and that makes me happy. So, and then just yesterday morning, Tesla came out and said that they bought $1.5 billion in Bitcoin on their balance sheet. It's again, it's great for the awareness. The part that confuses me about Tesla doing this is part of their mission statement says they're trying to accelerate the world's transition to renewable energy. And Bitcoin is not the cleanest of the digital currencies. Lots of energy gets used to keep the network going.
Let's talk about that.
Okay.
Why? It's a digital currency. Why would it generate any carbon footprint?
So Bitcoin is a network. It's called proof of work. So the work that happens in the network is called mining. The mining is, think of it as a bunch of math that happens in a computer. There's specialized computers that do it these days. Used to be able to do it on a laptop. Those days are gone. Now it's literally a special computer set up just to do the Bitcoin math. And the last that I saw, it said that Bitcoin was using about 1.5% of the world's energy produced each year, or on par with the country of Sweden.
Wow.
So, if there's a company that's all for clean energy, I get that they probably want to have an asset on their balance sheet that is appreciating if they can, especially like a cash-like asset. But I don't know. it's a little conflicting.
And the reason why this is done is that if you are exchanging Bitcoin, not on like an exchange like Coinbase or PayPal, for example, but if you have one of these wallets out there in the world, and you're exchanging Bitcoin with someone else, that has to go into the network, right? And they have to verify that you have your Bitcoin and they have their Bitcoin, and then record the exchange.
Correct. With a small little change there. So if I have my Bitcoin password stored on a hard drive, like we were talking about a few minutes ago, those Bitcoins are not actually on that hard drive. The Bitcoin stays within the network. You just have the special password to go and say transfer it from this wallet address to that wallet address. That is the only thing that you're storing. So you don't lose your Bitcoin; you lose access to your Bitcoin.
Okay,
if that makes sense.
So that's what, but that's what these computers are trying to verify.
All the math. So it's
it's not just one;
it's millions of them. I mean, there's like if you've seen a picture of what a data center looks like, there's that equivalent for these machines in data centers. They run 24/7. Typically, they're near cheap power, so maybe near hydroelectric. I think the last I saw something like 60-something% of them happen in China. Some are trying to be built in the U.S., but it's different. So, but the ones in China sometimes will even like get shut down a little bit because they need the power to go elsewhere. So like they're just purely like I wouldn't call them bottom feeders for power, but kind of the absolute cheapest power. So it's an evolving space, and the more climate change becomes an issue for politics, this may become to a head. Like, some countries maybe, I've heard of the idea of putting a carbon tax on the buying and assuming the selling of Bitcoin. So much like, it was likened to the extra tax that were put on cigarettes.
Right.
So the equivalent of that.
So all these institutions buying Bitcoin, I mean, I have a hard time believing that they're just out there doing this because it's cool and they want to talk about it
right
over the water cooler with their other billionaire friends.
Mm-hmm.
So what do you think the movement is behind this?
I think if it comes down to, in some sense, people are worried about inflation of the U.S. dollar. Was it 20-25% of all dollars were created last year with all the stimulus that was done? That hasn't necessarily reflected in all the prices we've seen. But if you can have an asset on your balance sheet that is somewhat independent of the U.S. dollar, it's not exact opposite. When the market corrected in March with COVID, all that mess,
Bitcoin's down just as much.
Bitcoin is down just as much, but it's recovered much quicker and gone much higher. So it's correlated, uncorrelated. I don't know. I'm not a financial advisor, so I'm not quite sure the exact word there, but it's. I think people are just trying to like find a way to give something that also gives them in a form of it gives them growth or appreciation, right? I mean, you're not getting anything on dollar deposits these days.
Right.
So it gives you the ability to kind of maybe if the market goes your way, but again, it can also go the opposite way. And like the dollar would have been a great idea some of these days. So,
well, you should never get that. I don't think you should ever get Bitcoin mixed up with your savings. Your savings should be your savings, and it should be in the currency in which you live in.
Absolutely.
But maybe there's a case for a 1% allocation.
Yep.
We talked about this earlier, but you think about a 1% allocation to Bitcoin that does Bitcoin does go to 400,000 from 46 where we are now.
Yeah.
That's a huge move in your portfolio where if it goes to zero, you're okay. Maybe you don't even notice if the rest of the market's up.
Right.
Where if you do this with gold, you got to carry 10 to 15% to actually move the needle in the portfolio based on what the dollar is doing. But I did notice that too, and the Bitcoin sold off during the COVID sell-off rather rapidly. But I did notice that as soon as the stimulus passed, all of a sudden it jumped way up.
There's, on crypto Twitter, many people joke that every time that Congress talks about sending everybody more stimulus checks, it's like, oh, what are you buying with your stimulus check? And it has nothing to do with what Congress wants them to buy.
Right. Yeah.
Yep.
Robinhood and Bitcoin.
Yeah, exactly.
Is where all the stimulus checks are going from the millennials.
Yeah. But I think it's not the easiest thing to have in a portfolio for a financial advisor these days. Bitcoin, you can't just like open up a Coinbase account for your client and go do it.
Right.
So there's no ETF currently to go buy. You have to do it through like a traded trust, the GBTC. So,
yeah, that's the Grayscale Trust. We demoed a platform that'd be like an exchange, and we could develop a cryptocurrency portfolio. But what's interesting is that none of the this was a very new company. Like I was talking to the owner, and I think maybe there's 2 employees. And I did it just because I just wanted to learn more about it.
Yep.
But what was interesting is they admitted that none of the big brokerage houses were willing to connect with them. So in order to put the assets there, it's almost like you're having to take custody of those assets, and it's an advisor that triggers so many other rules. So that's not really a viable way to do it. The problem that I have with Grayscale is that there's a 20% premium on the purchase of Bitcoin.
Yep.
But at the same time, maybe a 20% premium when it's moving 10% a day, it pays for itself in just a few trade days,
right?
Potentially. And then there's also the market timing of it. It's like, oh, it's 46,000 now. I'm not going to buy it this high, but it could easily be at 100 tomorrow.
Right.
There's no rhyme or reason for it necessarily.
You might see financial people in general talking about it and trying to apply the models that they do to stocks and all these other assets or asset classes to Bitcoin. And quite frankly, digital assets is a new asset class. This hadn't happened in like 200 or 300 years since bonds came around. So I'm not quite sure we know how to properly assess it. It is purely speculative right now. And, like it's gone up 4x. Well, guess what? We could talk again in 3 months and it could be down 6x. And
that concerns me too about adding it to portfolios, simply because at least our client base here is slow and steady wins the race. And,
absolutely. And
none of us are trying to get rich overnight. We just want that average S&P rate of return over our lifetime. That's amazing rate of return when you look at it on a graph, despite all kinds of crisis we've gone through in the last 20 years. So to add Bitcoin, you're kind of like, well, what's the purpose of that in a portfolio? So I'm still doing some soul searching and a lot of reading on that and the risk of that. But certainly, for a younger person, it can make sense.
Yep. And honestly, people that aren't staying up on the price today or the happenings in the news of the crypto space, but also want to become invested, my suggestion to people these days is just open a Coinbase account and then just do the weekly or monthly automated buys and just set it and forget it.
Yep.
Don't do anything crazy. Just understand you're in some ways buying a lottery ticket right now. There's not tons of regulation around it, and the market can be manipulated. So that's why the weekly buys, and you just hope for the average over time.
So let's talk about risk, government risk.
Yep.
So we have a currency XRP, also known as Ripple.
Ripple's the company, XRP's the currency.
Thank you.
Yep.
And we have a lawsuit in our hands. Tell us about that.
Yep. So the SEC filed a lawsuit against Ripple, its current CEO and former CEO, alleging that XRP is a security and that they sold $1.3 billion of it in unregistered securities from 2013 through today, or through the lawsuit was filed on December 22nd of last year. The day that was filed, I was bummed because I was like, why do we have to come to blows like this? Why can't we be a little bit more proactive and kind of put a regulatory framework in place that's not there? But I also felt like they haven't done it all these years. Well, this is probably going to force the issue. So I was kind of, in some ways, happy about it. So some interesting stuff about the lawsuit. It was, again, filed on December the 22nd. The SEC chairman, Jay Clayton, steps down to finish his term because of the new administration coming in on December 23rd, the next day. About a week later or so, some enforcement officials of the SEC also stepped down. The SEC had offered Ripple to do a settlement, and Ripple turned it down. They didn't say what the settlement was. So I think Ripple kind of views this as more than just about themselves, and it truly, in my opinion, is. It has the potential to affect the entire asset class. If you kind of, I guess, connect some dots here. The first being if, say, the SEC is successful against their case against Ripple.
And let's talk about that for a second. So the case is that this is not a currency.
It's not a currency.
This is a security. So they're saying, Ripple, you're not really a digital asset. You're like a stock.
You're a stock, and then that means
you're violating these stock-based rules.
The stock-based rules in like our securities law is from the 1940s. There's something called the Howey test, which came about when people were selling portions of orange groves in Florida in the 30s. And so we're now trying to liken digital assets to orange groves. Seems like no one back then, when they set up the Howey test, really had ever thought about digital assets.
Probably not. Yes.
Probably not. So it's difficult. The problem with being deemed a security is all of a sudden all the people that touch it, so these exchanges have to be licensed in different ways than they are now. They actually are licensed in some ways, but as money service providers rather than, say, an exchange, a true exchange like a brokerage. This creates so much more, burden on the market. And then also it, in some ways, lessens the use cases for these things. So all of a sudden the taxes become different on these potentially, or the, you're not using Coke shares, for instance, to help move U.S. dollars into Mexican pesos from a cross-border remittance thing. The XRP in this case is trying to solve that problem. So it's just the liquidity would be different, and honestly, the use case would maybe be null and void. But, so the SEC is making its claim. The SEC thinks it's the big dog in the yard. And in many ways it is. What's interesting is you contrast that with, in 2018, FinCEN, so they, another U.S. regulator, classified XRP as a currency. Okay, that seems to fit more of its use case and kind of what it's about. The OCC also has a public opinion about it being a currency of some kind. I don't know if they exactly use the word currency, but I think it's like cryptocurrency of sorts, not security. So, I think Ripple in some ways is trying to fight the bigger fight of trying to help the whole space by getting some regulatory clarity in place, by trying to force the SEC to kind of deem XRP not a security, but also kind of give us a framework to understand, okay, maybe there's 3 or 4 different kinds of these. There's cryptocurrencies, there's a network currency that helps do a certain thing on a network. And excuse me. So it'll be interesting to see how this comes. I mean, there's part of the G7 countries have kind of really led the way here. The U.S. is very much a laggard around the world. The U.K. classifies XRP as a non-security asset, so functionally still acts as a cryptocurrency. Japan classified it as a cryptocurrency. Germany has classified it as a financial instrument and acts in the same way as a cryptocurrency. And they all have their own taxation laws around this stuff, but there's just so much ambiguity around how they should be handled in the U.S. Most of those G7 countries have a single financial regulator. That's not the case here in the U.S. It's like at least 3 or 4 of them that kind of try to have their own viewpoint, and honestly, they're conflicting currently. So it's a mess. Later this month, the lawsuit will go to the point where they set the calendar for it. And this could drag out for years, or it could be a settlement tomorrow. It'll be interesting to kind of see how it goes.
Do you think that carries forward into other things? Could that happen in Bitcoin?
I think, I believe that Bitcoin, if anything, is a little bit more in the clear than anything else. Ethereum, which is the second biggest, has largely been viewed as it started out as a security, but it's morphed into a non-security because it's effectively distributed enough to not have anybody with controlling interest. Bitcoin was basically distributed from day one. There's an account that's of the individual that started Bitcoin, which they don't know who that physically is, but at least the pseudonym holds an account that has roughly 1 million Bitcoin in it, but has never touched them from the day that they mined them. So it's if anything, it will affect the smaller cryptocurrencies, like XRP being one of the biggest. If the SEC is successful there, then they can kind of go down the totem pole from there and just say, okay, you've made this mistake. We already have, we have proof in court that this is bad. Pay up, right? And then obviously be settlements and stuff along the way, or they get put out of business and really could wreck the whole space, which would be really sad because it has so much potential, right, in my opinion. So,
well, I think that just adds to the unknown risk. How much risk are we carrying when we add something like this to a portfolio? And it's the wild, wild west.
Yeah.
I feel like that it's, we haven't had anything like this just appear. Mm-hmm. I mean, maybe a little bit with technology, maybe initially, but even that was somewhat regulated because software and all that.
It was a security. There was a model for it.
Yeah, there was a model for it. This is more like we're going to go west and we're going to build this railroad, mm-hmm. and they just did whatever they wanted to connect the railroad. Exactly. And then eventually later all those regulations came in. I think that's exactly where we are right now. So it's hard to wrap my head around, should this be inside someone's portfolio? An everyday person's portfolio. Yeah. Your mass affluent between $100,000 to $1 million. Right. Even very high net worth between $1 million and $5 million. Yep. That makes maybe a little more sense at a 1% level, but I'm still trying to say, is this an asset class everyone should have? And my opinion on gold is, you buy the coin, you bury it in your backyard. It doesn't need to be inside your portfolio. Right. This has a little different feel to it.
Mm-hmm. Yeah, because depending on the coin, I mean, right now they're all speculative, and they're much like the analogy I use with some friends is it's like a long dated option that has no expiration. Right. On a stock, right? You're just buying the option on this market being bigger in the future. But it can change on a dime. Like the day that the SEC announced its lawsuit against Ripple, the XRP price was at 56 cents, and within 8 days it was at 18 cents. Well, there you go. There's a 65% or so reduction. Again, it's recovered back up to the mid 40s, but like.
Yeah, but that recovery is part of that the GameStop mania, right? They're
exactly.
Go after Ripple as if they're going to break the system, and
it's
not going to do that.
It's not going to do that, and quite frankly, I mean, it's recovered back up to 46, but basically the whole of their space has gone higher since then. So it's recovered, but it's also lost ground, at least temporarily. So you have to almost view this stuff as entertainment. If you're buying and you're watching the price, you can't get emotionally wrapped up in it because it'll mess you up quickly. So it's I find it fun to follow the space, but it's the if we could fast forward a couple of years, it'd be great and just kind of get through this mess and kind of see where the technology takes everybody. So
we'll be interested to see how the government clarifies it, and then just how the market looks at it. I think it's very interesting with all the institutional money coming in. Mm-hmm. It kind of gives it some validity, I guess, and it'll be over the next few quarters. It'll be interesting to see how many other organizations it pops up on their balance sheets. Exactly, kind of by surprise. So, hey. Enjoyed the conversation. Mm-hmm. Thanks for coming in and doing this.
Thanks for having me.
We'll talk to you soon.
Thanks.
Wiser Wealth Management Incorporated is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.